Hello, fellow option trader. With so many option strategies and individual contracts to choose from, it can be difficult to select just one. But don't worry, I'm going to show you one way to help narrow down your choices using your favorite chart setups in 5 easy steps.
It all starts with your chart, customized the way that you like it. The goal here is to use your chart to form an opinion on the price action going forward. Are you bullish, bearish, or neutral? A helpful indicator that can be used to identify pricing trends are moving averages. Moving averages tell us how the stock is trending over different periods of time. It's common to use multiple moving averages. In this case, I've plotted a short 21-day average, an intermediate 50-day, and a long moving average of 200 days. To help identify the trend, we're looking for 3 things. Is the share price above or below the moving averages? What direction are the averages sloping? And the vertical orientation. For instance, if the short-term moving average is on top and the long-term is on the bottom, that will typically signal a bullish trend, and if the reverse is true, a bearish trend. Here's where your trade really begins to take shape. Your price sentiment will narrow your choices somewhat, but it's time to gather more information so we can get really specific. Your interpretation of the chart influences this decision, but there are other factors at play, such as your risk tolerance, the account type you're placing the trade in and its option approval level, as well as how much cash or buying power you're willing to commit to the trade. Some of you may not be comfortable with naked options because of the potential risk, and that's okay. Spreads can be a viable alternative to minimize your risk and neutralize the impact of volatility. Now is a great time to consider current levels of volatility. Generally speaking, in times of higher volatility, lean more into selling options to take advantage of inflated premiums. And in times of low volatility, lean more into buying options. There are many studies to help identify current volatility environments. 2 that are commonly used are Bollinger Bands and Average True Range, also known as ATR. Bollinger Bands are unpacked in detail in another video, but essentially they use standard deviation to plot an approximate 95% probability of pricing range off of a moving average. We're able to see expanding and contracting volatility zones based on the width between the upper and lower bands. ATR, on the other hand, just like the name implies, tells us the average distance over a given amount of time between the high and low of the day, telling us if the price action is picking up steam or not. Now that we've found the trend and understand the volatility environment, let's identify key pricing levels where the stock has found support from going below thanks to demand in the market and resisted going above due to supply. Are you expecting a short-term breakout that lasts days, or maybe a reversal of a 6-month-long trend? Here we can see the stock since achieving highs early last July, bottoming out early this April. With the price rebounding, it's settled into a support and resistance zone. Even with the stock gapping up, momentum wasn't able to carry the price past 175. Seeing the price fall back down, filling in the gap, but finding support around 155. With the stock at the top of its near-term pricing range, having failed to break out after testing 175 again, could there be an opportunity to profit if the price retreats back to previous levels while crossing below its 200-day moving average, potentially forming a double top pattern here? You're coming down the home stretch. It's now time to lock in your strike prices and expiration. This might be one of the most important steps of them all because it can really impact the success of your trade. Think about what price you think the underlying will be at expiration and compare that to where it is now. How long will it take for the price to move the way that you expect it to? One thought is to consider how long it took for the chart pattern to form, as it may take a similar amount of time for it to complete, and then give yourself an appropriate buffer on top of that. Adding timelines as well as events to your chart can help clarify your time expectation and keep yourself informed of any upcoming key dates. Here, we can see that the most recent earnings event just passed by, and the next round isn't until the middle of August. Now, let's go check out the option chain and review the premiums. If we think the stock will continue to pull back off the 175 resistance zone that we identified on our chart, we can buy the at-the-money 170 puts. Now, to take the trade kind of one step further, if you'd like to limit the cost of your trade, removing some of the risk, you could also sell a lower strike put. Let's use the 160 puts to make a bear put spread. This is cutting our costs substantially, but it's also limiting the profit potential if we're right. So there's your trade based on analyzing the chart, but what's your exit strategy? Do you sell when you hit 80% of your max profit to lock in your gains? Or maybe you sell when the chart signals a change in sentiment. Do you use an alert or a stop order? It's usually a good idea to have some sort of criteria for exiting your trade, whether it's a profit or loss. And your risk tolerance will play a big part in this decision. However, chart patterns and support and resistance levels can help you choose those exit points too. If you want to create an exit strategy using a conditional order, simply click the plus button on the bottom left of your order ticket and enter your gain and loss closing prices.
There you have it. Choosing an option strategy, expiration, and strike price no longer has to feel overwhelming. By applying these 5 easy steps on how to select which options to trade, you can feel more confident about your choices. Thanks for watching. We'll see you in the next one.
Have more questions? Check out the links to the right and in the description below.